the extreme inefficiencies could actually lead you to blowing up in some ways easier back in the day. Most obviously, just trading anything with leverage. I mean, volatility has decreased substantially. Back in the day, trading a random altcoin with leverage on OKX in 2019, like that was a recipe for disaster. It's still possible to blow yourself up doing that now, but it's definitely harder.
The coolest thing that Multicoin did is it lasted for 7 years, right? If you consider the number of funds that have lasted for 7 years, there's so few. And I was just like, props to Kyle and team for that.
Thank you. For what it's worth, I agree. The most important thing you did was not die.
The sector that you guys are most interested about?
The default perception will be Bitcoin and Solana look kind of the same to me. They're both called a crypto. They both kind of use this cryptography thing. I don't really know how it works. They both have these funny long addresses that I can't fucking read. They both move money around, clearly. And like Solana powers all the useful stuff and Bitcoin does not.
Welcome to the DCo Podcast, where we bring you stories from founders and investors in Web3. Before we get started, this is not a financial or legal advice. It's just a conversation about things we find interesting in Web3. Views expressed are our own personal opinions. DCo members or guests appearing on the show may have positions on assets they talk about. Although our guest this week is a managing partner of a registered investment advisor, nothing in this podcast should be considered an offer of Multicoin's investment advisory services or should otherwise be confused for investment, tax, legal, or other financial advice. All right. Welcome to another episode of the DCo Podcast. Joel and I are hosting Kyle Samani. He's a managing partner and founder at Multicoin Capital. Welcome to the show, Kyle.
Hey, Saurabh. Hey, Joel. Pleasure to be on the show. Thanks for having me on.
So we typically get into people's background, but I think I have a different idea of how to do that here. Kyle, while I was preparing, I was going through your blog way back till January of 2013. I think that's when you started writing publicly. Yeah, and since then, you've written about a bunch of topics like from healthcare to monitor reviews to Apple Watch, Google Glass, and whatnot. And interestingly, in 2015, I see this article titled Bitcoin Will Disrupt Working Capital Management. Right, so let's just start there.
Oh, man. I don't even remember the post you were referring to. You said 2015?
2015, yeah. I think November 2015.
I mean, that's before I even really got into crypto. I honestly don't even, what did I say?
Oh, you were basically saying that Bitcoin will be the payment rails of the internet. And since we can make more frequent and micro level payments, it'll improve working capitals of like typical businesses. That was the thesis.
I see. I mean, it's very funny to reflect on that. At the time, I was 25 years old at that time and was very biased towards there's always a new technology and the new technology always wins at the expense of the old technology. And I didn't appreciate inertia and a bunch of other things. I also did not understand fully how Bitcoin worked. I just never bothered to really understand proof of work and all the scalability challenges as of that time, or the correct understanding of that blog post. I was very pro new software things without much regard for other variables.
To be honest, I think if you replace Bitcoin with stable coins, I think that blog post still kind of holds true.
That I would agree with, but obviously stablecoins were not a thing. We certainly did not have high performance chains either back then as well. So that part I agree with. Just the Bitcoin part, both as a technology and as a volatile asset, I do not agree with.
Okay, so between 2015 and you starting Multicoin, like what was that journey? And like, were you always this thing that you wanted to start a fund? How did it start?
Yeah, so I kind of left my last company, which was called Pristine, in December of 2015. I was working in healthcare, was pretty jaded by healthcare, and didn't want to stay in healthcare, and was kind of poking around different things to do. Discovered Ethereum in March of 2016, and started kind of poking around at Ethereum and found it to be just very flexible and interesting. And that's what I liked about it. And so over the course of kind of the next 3-4 months or so, kind of fell down the Ethereum rabbit hole. Augur had already done its ICO. Zcash was getting ready to launch. Monero was around. I think there was a couple of other 2016 era ICOs. And you could kind of feel, and then obviously the DAO hard fork happened. And so there was actually just like a lot of stuff happening to Ethereum at that time. And I kind of started getting more and more interested. By the beginning of 2017, by this point, I've already probably by really shortly after the DAO hard fork, maybe 1 or 2 months after the DAO fork, I kind of went all in Ethereum, put basically my whole net worth in. And by early 2017, I realized I was reading about crypto on the internet effectively 40 hours a week. And I was like, Polychain had launched in September of 2016. Coin Fund was around. Although really Polychain, I'd say, was the more direct inspiration for us to get started. And I remember when Olaf launched Polychain, I was like, I don't know, dude, this market seems kind of too weird. And by March, April of 2017, I started to think it was not super weird or it wasn't doable. And the thing that ultimately gave Tushar and I the conviction to, commit our lives to this was the Gnosis ICO. It was May of 2017, and they raised $12 million in, I believe, 2 blocks, and at a $300 million valuation. And that was we gotta go. Now is the time. And so that's when Tushar and I committed to launch Multicoin, was kind of right in the wake of the Gnosis ICO. It took us a few months to figure out how to set Multicoin up because we did not know how to set up a fund. But over the course of the summer, got the fund set up and launched what is now Multicoin's hedge fund product on October 1st of 2017.
Yeah, so it's been like 7 years now. Recently, yeah.
That's correct. That fund just turned 7.
And I think when I went to Multicoin's website, it says that crypto will create the largest one-time shift in wealth in the history of internet. I mean, can you unpack this for us?
Yeah, probably the most true part of that statement is the mechanical part, which is weird. And traditionally, 3-ish major class assets in the world: bonds, equities, and commodities. And, all of those have their own mechanical, whether it's the DTCC or whatever else, or, you have a certificate for a bar of gold in a vault, or maybe you have a piece of gold under your mattress, whatever it is. But there's been a, very established set of mechanisms for literally owning and transferring those 3 asset classes. And crypto very obviously invented a new one, which is the self-custody private key thing. And, for that reason, huge amounts of capital in the world are structurally either unable or unwilling to own these assets. And at some point, if you assume that mechanical reason will stop being a reason to not own, then it simply means by just being there before them, you make money. And so that's not typically the intended understanding of the statement, and it's really not probably something we intended to say, an intention behind that statement when we made that statement, which at this point was 5 years ago, maybe 6 years ago. But something I've kind of come to appreciate now that I've been doing this for a while, and I talk to a bunch of big investors pretty frequently, is the mechanical part is real. I think the other part of that statement is, these systems just represent fundamentally new mechanisms for capital formation and for humans to coordinate in a way that just did not exist previously. And, in some sense, what is the story of humanity over the last few millennia, or even say 100 millennia, is people figuring out how to coordinate. I'm sitting in a high rise right now, and obviously a high rise, I think, is a great example of how many people did it take to build a building so it doesn't collapse? And I'm on my Wi-Fi at the top of the building. So that element of it, and crypto is really human coordination on steroids in a lot of ways. So I'd say those are 2 very profound big ideas that I think collectively lead to the output of largest one-time, wealth creation event in the history of the internet.
I think, Kyle, I just want to double tap on that, right? Do you think that wealth creation at such scale happened when the internet was taking off?
I mean, it happened at scale. It definitely not at this scale. I believe the entirety of the 2000 NASDAQ bubble was on the order of $1 trillion in market cap. Maybe more, maybe 1.5 or 2. Let's just round up and say 2 trillion. Crypto is kind of at 2 trillion right now, I think, plus or minus.
Yep.
And yeah, crypto's got a long way to run. So actually, there's a third part of that, which is, sorry, your original question, which just occurred to me, is the nature of permissionless ownership. My guess, no more than 1 billion people on the planet Earth own liquid investable assets. Definitely more than 1 billion own some real estate, because obviously in a lot of emerging markets, people own their primary residence and stuff. But a huge percentage of the world owns effectively zero liquid investments. And it's pretty obvious to me that the substantial majority of those 7 billion people who don't own any liquid investments are going to own crypto before they own Apple and Google. That to me is, I don't even understand the other side of that argument.
Is that because of social media? Like, what do you reckon the causes are?
Yeah, I mean, so some legal regulatory things, just like accessibility, the fact that it's self-custody is a huge deal. For a lot of people, their first Bitcoin is not going on an exchange and buying it. It's their friend either giving them some for free, or you hand your friend $50 and your friend sends you $50 worth of Bitcoin. And like, you just can't do that with equities. So there's like a very mechanical part, which is that. And then to what you alluded to, the social media part, or what I would just call the information part, learning about Apple is quite frankly pretty boring. Learning about Helium or Eigenlayer or Hive Mapper is just like, I think it's called Cryptalk and in TikTok investing. And like, just spend 20 minutes scrolling, man. And like, look at the crypto people and look at the equities people. And I can tell you the crypto people are unilaterally more entertaining than the equities people.
I think just one point to add here is quite probably stablecoins are the Trojan horse that take some of these assets to the people, right? Just like TikTok is. Because a lot more people can access stablecoins before they can access banking in the current world, so to speak.
Yeah, I mean, stablecoins are obviously huge. I was just alluding to volatile crypto, but I was spending a lot of time with politicians recently. Multicoin has been fairly publicly involved with current U.S. election cycle. And a thing I kind of started telling politicians, and I've kind of come to think is underappreciated in crypto circles, is US dollars are the greatest product in human history. Not like the iPhone or whatever, but like on the basis of it's the thing that the most people want. And I think if you go around the world, I think if you could go to each of the 8 billion people on the planet Earth and ask them, the following question without any fear of local persecution, if you could denominate your wealth in any asset, what would it be? And that could be bars of gold, could be Apple stock, could be US dollars, euros, Singaporean dollars, yen. You pick your asset of choice. My guess is somewhere between 4 and 7 billion of those people would say US dollars. And so I think in a very literal sense, US dollars are the most in-demand product in human history.
I want to double click on something you mentioned, that you and Tushar went all in on Ethereum, right? At what point that stopped being the case?
I don't remember the date, but you could look it up. It was at DevCon 3 in November of 2017 in Cancun, Mexico. Multicoin is 6 weeks old at this point. And it's basically peak of the market, November 2017. Ethereum is up 100x year to date at this moment in time. Obviously, all the ICOs, all in Ethereum. Silicon Valley is getting excited. Coinbase emerges as like a real company in 2017. Binance emerges. I mean, 2017 was like a pivotal year for crypto. Ethereum is the star of the show. Like, no questions asked. Bitcoin was up 10x, Ethereum was up 100x that year. And gas fees are spiking left and right. Every time there's an ICO, gas fee spike, takes minutes to include a transaction, all of which was expected behavior. Like, none of this was like, oh, wow, like, where did this come from? They knew when they launched this thing in 2015, all of these problems were going to happen. And over the course of 2017, every few days, the network is having real congestion problems and stuff. And obviously they know this, and they've been talking about scaling for a while. And back then there was Plasma, there was state channels, there was hypercube routing, there was sharding, a whole bunch of ideas. And, I remember I went to DevCon and I was like, okay, guys, Vitalik and core EF people, all eyes are on Ethereum. You were the star of the show in 2017, the greatest year in human history for an asset. Ethereum is the fastest asset in human history to $100 billion in market capitalization. Nothing else has come close. And actually, maybe Solana did, but that was after a few years later. Anywho, so, you have just this spectacular run. You're the center of attention, and you need to figure out scaling. It's your annual developer conference. Everyone wants to know what's the game plan. And you go to the keynote from the founder, and Vitalik gives you a history of Ethereum, because that was on his mind. I don't really know. I got to the keynote an hour early, so I sat in the front row. And I left, and I was like, are you fucking kidding? How can you be so clueless as to what is going on in the world, and to not understand what you need to do, and just entirely oblivious. And so that was my moment of these people are clueless. Right. I was already pretty frustrated. I mean, at this point in time, Ethereum is almost 2.5 years old. I have been following Ethereum at this point in time for about 18 months. And I'm getting antsy. I'm like, hey, guys, what's the fucking plan? And like, it's like, this is clearly the moment, the place you are supposed to unveil the plan, and nothing.
So, like, was that the point that drove you towards EOS? And
Oh yeah. Immediately we began searching for alternatives immediately after DEF CON.
yeah, my follow-up was that, is Solana what you had hoped EOS would be?
In one word, yes. I mean, that's a little crude, but like, sure.
Like, I also want to follow up on like what happened with EOS later on, and like how did you switch over to Solana? Was the story something similar to what was happening with Ethereum?
Yeah, I mean, look, we started looking right after DEF CON. I think we initiated our first EOS position, I believe, in December of 2017. So, a few weeks later. And I mean, EOS was in many ways the opposite of Ethereum. Big blocks. Dan Larimer had been around for a while. They had raised a bunch of money. They were very aggressive. Like, you didn't have to look very hard, like, understand that, like, these two teams were approaching the problems from almost opposite vantage points in kind of all respects. And that appealed to us. We were like, great, like, I don't want something that looks 96 or 7% like Ethereum and is 3% different. I want something that looks totally different. And that's exactly what EOS was. And it was very clearly the most credible alternative of that time period. So it was just kind of a no-brainer that we would end up there. In fairness to the Ethereum people, there were a lot of criticisms of EOS in terms of its gas model is the one that I recall most directly. I think there was also some known problems with its DPoS consensus as well. And the Ethereum people were like, yo, guys, your system is broken. Like, it's not going to work. And our view was, dude, these are mechanical details. Like, they'll get figured out, whatever, who cares? And to the credit of the Ethereum people, they were absolutely right. Those problems were fundamental and, to the best of my knowledge, never actually fixed. And those issues are probably what led to the ultimate demise and fall of EOS.
Kyle, did you guys at any point in time look at L2 solutions on ETH? Like there were a few in 2017 ETH ecosystem as far as I remember, or like 2018, let's say.
Oh, the term L2 did not exist at the time at all. There was discussion of the closest concepts to what we now call L2s were state channels. There was one called Raiden,
Plasma.
and then Plasma, which would fit under the academic definition of an L2 today. But in practice, Plasma just doesn't solve any problems for anyone, so no one's fucking building it. But the term L2 did not exist. Raiden was around. They did raise money. They did an ICO. Obviously, they've done nothing in the 6 years since then, 7 years since then. Plasma is also basically only existed in academic. I mean, there's probably some proof of concepts that were, written but no one has actually seriously tried to productize Plasma to the best of my knowledge. So, other people came up with ideas on how to scale Ethereum in the ensuing years. One was called Scale, Skale, which we did invest in at some point in 2018. And then the term L2 may have been like loosely thrown around in 2017 and 18, but really had no defined meaning at all. I think L2 came to have a more concrete shape as kind of the roll-up terminology came into existence. And if I recall, that kind of initial terminology was spearheaded by, I think it was Carl Flourish of the EF, and then he later became one of the founders of Optimism. And he worked on some of that early research and thinking, I believe, with Vitalik. This is probably 2020. Yeah, I'm guessing this is early 2020.
I don't think we have mentioned Ethereum as an L1 to begin with back in 2017.
You didn't have to, right? Because there was no reference. I mean,
Yep.
It was literally the only thing around. There was absolutely nothing else.
I think just double tapping on this, right? I know you gave a few reasons as to why EOS didn't work out. Did you guys at any point in time see dApps or any kind of initiative that went towards making EOS commercially viable the way Solana is today?
I'm trying to remember what apps were around. And we looked at a bunch of EOS-based applications in 2018.
Yeah.
I cannot recall any of their names specifically off the top of my head. So that tells you what you need to know.
That makes sense. Since then, Kyle, I mean, you guys start looking for alternatives, and at the same time, the fund is also taking shape. You guys are probably hiring, expanding the team. So how has the 7 years been for you guys? Like, if you can share some broad strokes, inside view of Multicoin, so to speak, with us.
Yeah, I'd say it really took us a few years to figure out who we are, or I should say like how we want to operate as an investment firm. I'd say probably 4 years is probably pretty good assessment of that. In the first few years, we were doing at least two major things that we are no longer doing. One of which is we had an internal quant team. We were trying to build a quant strategy with the hope that we could eventually launch a dedicated quant fund in addition to our hedge fund, which is a buy and hold type vehicle. And we ended up scrapping that, throwing that all away. It wasn't working. Then the second major thing we were doing that we don't do today is we were actively trading beta. Today, our fund strategy is we're 99% net long, very straightforward. That's not like hard and fast rule, but I mean, directionally that is true. And we are obviously a very long biased fund. And we realized our core strength was asset selection and thesis formation. And we became very comfortable with that fact and came to learn how to talk about that with our investors and obviously focus all of our team's efforts around that. So I think that was like the big thing we had to figure out. And it took us a few years to figure it out. I think most fund managers should have more clarity on those questions when they launched their funds. We did not. And I think the reason we did not was our own naivety. I mean, Tushar and I were 27 when we launched Multicoin. I was 27, Tushar I think was 26. And we had never worked at an asset management firm before. So we had no formal training whatsoever from another firm. And then the market was just like truly wild enough that we kind of just felt like, hey, we can like, there's easy money to be made in all these different places. But probably mostly it was just our own naivety about like how to build an asset management business. We feel pretty confident now that, we're generally in our swim lane. And to be clear, I actually think it's important that you step out of your strike zone every now and again. You should never be too rigid in your strategy, but you should know what your strike zone is. You should be aiming to play in your strike zone at least 90% of the time. I think somewhere between 5 and 10% of the time, it's very much warranted to kind of deviate from your strike zone. And then obviously, if and when you are going to deviate from your strike zone, you need to be very clear about, why you're doing so. And yeah, it took us a while to figure all that out.
I think, Kyle, do you think the market would be as patient? Like you said, you took 4 years to figure out, the comfort zone, right? If you were starting off today, do you think it would have just taken you as long to figure out what your strike zone is? And do you think the markets would be patient enough for that?
I think 27-year-old Kyle would fail launching Multicoin today. Unclear what 34-year-old Kyle launching in 2024 would do. And obviously, the last 7 years of my life have been Multicoin. So it's hard to reflect on counterfactual Kyle who did not do Multicoin.
The reason why I was curious is, I think that the period between 2017 to 2021 was relatively more forgiving versus the market now. Or maybe you have a different view of it, and that is the market was way more brutal back then.
I agree. I think the markets are becoming less forgiving over time.
I mean, that's the nature, right? I mean, it has to.
Well, sorry. So I think as a general statement, that is true.
Right.
And that's like a function of market efficiency. However, the extreme inefficiencies could actually lead you to blowing up in some ways easier back in the day. Most obviously, just trading anything with leverage. I mean, volatility has decreased substantially. Back in the day, trading a random altcoin with leverage on OKX in 2019, like that was a recipe for disaster. It's still possible to blow yourself up doing that now, but it's definitely harder. Not that we do that, but just as an abstract statement. There are new ways to blow up, but it's getting harder to outperform. That is for sure the case. Possibly it's getting easier to not blow up.
I was discussing Multicoin with Saurabh prior to this, and one of the things I flagged to him is that the coolest thing that Multicoin did is it lasted for 7 years, right? If you consider the number of funds that have lasted for 7 years, there's so few. And I was just like, props to Kyle and team for that.
Thank you. For what's worth, I agree. The most important thing we did was not die.
Right.
Okay, so if you were to launch an L1 or an L2 to compete Solana today, what would it look like?
I don't have any good answers. I've talked to a lot of people building L1s and L2s about these kinds of questions on a fairly regular cadence, and I've got nothing, or actually nothing specific. I think to the extent I'm forced to answer the question, I would approach it like the Say guys did, which when we invested in Say was a couple of years ago. And the Say guys said, look, Ethereum and Solana claim to be neutral. And as a result of that, there's all of these either bad or inefficient design decisions in their systems. And we are going to not be neutral. We are going to explicitly violate quote unquote neutrality in the interest of building a better product and or developer experience. And say Viva 1 launched and there was like a permission validator set and they gave, I think like a CLOB primitive was built into the chain. And I think they prioritized Oracle updates at the top of the block. And there were like a few other things of that kind of nature that they did that like definitely not as neutral as Ethereum and Solana are. And I think they made the right set of decisions, or I should say, their thinking, I think, was correct. Obviously, Say V1 did not attract meaningful adoption, and they pivoted into what is now Say V2, which is a parallel EVM thing. We'll see where that goes. But, I think the second iteration of that same experiment, one iteration of that experiment was DYDX, which their V4, well, there was the Stargate version and then the V4 Cosmos version. And it seems like the Cosmos version was actually a few steps backwards net, which is a real shame. And then, the other kind of more modern iteration of that same theory is Hyperliquid, which is basically taking the same set of opinions that Say did, and then going even one step further, and they actually built their own perp DEX as well. And so, to the extent that I would launch a new L1 or L2, it would probably be along the lines of what Hyperliquid is doing.
Fair. I think you've been quite vocal about MEV being a major model of value accrual for L1s, like versus the fees and DA fees and all other kinds of fees, because they are tending towards zero over time with better infrastructure and hardware. Like, how do you think of this MEV? Like, should it go back to where it originated from, like Flashbots guys think about, or should it go to like searchers and validators? I mean, I think the searchers share is also going to go down as probably 10-20% max. Most of it will be captured by validators. So I just want to understand how you think about MEV in general.
So there's no generic answer between like wallets, takers, makers, validators, and searchers. There's no generic way to answer, like split that percentage up to collectively add up to 100% of like what should be the market equilibrium. And the reason there isn't a generic answer is because like there are fundamentally different kinds of MEV in different contexts and situations. And like let me unpack probably the two most important categories, or maybe three most important categories. The most high profile category is sandwiching or just straight front running, which is very common today on both Ethereum and Solana. And that type of MEV, searchers are capturing, I don't know, somewhere between 50 and 80%. And then the balance is going to the validator via priority fees. That will go to 0% searchers. High degree of confidence in that statement over the next few years. Searchers are strictly leeches, and I think it's important to understand them as leeches. And everyone in the ecosystem should actively fight them and can fight them. And I expect searchers will not get to zero, but will trend towards zero. The second major category is sexed XArbs, which like is totally fine to me. Searchers go have fun, fight as hard as you want on whatever statistical models you want on these things. Validators will get some, searchers will get some. Great. There's no creation of MEV here. I mean, the creation of the MEV is the LPs are stupid and leaving money in the AMM. And if the LPs are the ones leaving the money in the AMM, like they should lose the money. There's no basis for them to be rebated. It's like, no, that's what you signed up for explicitly. Or if you're a market maker and you have a limit order on the book and you get picked off, like again, I mean, that's an engineering optimization challenge in your own infrastructure. So again, I feel no sympathy for you. And like you should get picked off and searchers should take some of your money. That's fine. And then the third major category is just what I'm going to call like application specific MEV. So this would be like back running an Oracle or like liquidating someone on like Aave or Drift or something, one of these kinds of things. And in those systems, again, you can take searchers to pretty close to zero. You don't have to take them absolutely zero. You need them to have some incentive to act, but that incentive can be fairly low. And the vast majority of that value should accrue either to the DAO, like the Drift DAO or Communo DAO or something, if it's like a liquidation relative to one of those systems, or it should accrue to validators in the form of priority fees from the searchers. But like you can just obviously imagine if the liquidation penalty is 100 points, 80 points can route to the DAO, meaning Camino or Drift, and 20 points goes to searchers, and then searchers are going to have to pay some percentage of that in the form of priority fees, to the validator for inclusion.
I think this is what Uber guys are building, right, Joel? The OEV, like I think.
Yep. Oracle extractable value.
Correct. Yeah. So Pitt wrote a post about this a few months ago. Basically, it's a back running auction, which obviously is, again, ties into all of the above.
But what I'm also hearing is it's not profitable enough to be doing any of this, post priority fees and validator incentives and the like. Do you think that search operations are worth investing in at this point in time? Would you invest in a business that explicitly?
I mean, if you generally have a background in HFT and their market making, yes. Otherwise, no.
Fair enough.
Okay, so like you're saying that, okay, MEV is one of the major sources of value accrual for L1s. So how does that value accrue to the tokens? Like, can we just bring it home?
Yeah, anytime someone pays a priority fee to the validator, then that's going to the validator, and then the validators are paying typically the vast majority of that fee, and now in some cases 100% of that fee to stakers.
And so none of the L1 tokens, I mean, to be frank, I think two of them claim to be money. I think it's Bitcoin and ETH. They call themselves ultrasound money. Although I don't think the meme holds true any longer because it's not been deflationary or whatever. So is it strictly MEV that accrues value? I mean, a source of value for L1s, or like, do you think of there's anything else as well? Like the moneyness as such?
I think the moneyness thing is real. Clearly, Bitcoin is a non-sovereign store of value. That's not really a question because it, quite frankly, is nothing. Like, there's no way to explain $1 trillion of market cap in Bitcoin. I've never even seen another plausible explanation for that. Now, that's a different question than is that a good thesis or good theory? I would contend the answer to that is no, it is not. But like, clearly, a lot of people believe in it and put their money where their mouth is. I think the mechanics, I think the way people talk about moneyness is mostly incorrect. The traditional view of moneyness, as espoused by the Bitcoin people, is based on a fairly simple set of criteria. Most importantly, the supply schedule. In Bitcoin's case, obviously, famously, is 21 million. It also includes a few other parameters. Can you validate the block at home? That's a very Bitcoin-centric statement, but like, sure, I can see how that lends itself, quote unquote, towards being money, although I think that's basically nonsense. Censorship resistance, I think, is like, if you're going to claim to be non-sovereign money, I do think you need to have a credible claim to censorship resistance. People say Bitcoin's the most censorship resistant of the major chains today. I don't think that statement is meaningfully true. Yeah, I mean, the mining pools, like what, 4 mining pools or something, they get you to 51%. And just generally the number of mining pools is fairly limited, and that just really skews Bitcoin's economic and censorability in pretty negative ways. And then obviously there's like another element, a fairly obvious one, is just like, hey, how like usable is it? And like, if I send you tokens, like, do you feel like you got them instantly? Or like, forget about me trying to rob Binance of $1 billion. Like, if I send you tokens and I can just double spend and do another zero a higher fee somewhere else, and I can just walk off. Well, that's like not a good user experience for money. And like in Bitcoin today, it's trivial, to do that. Obviously, you're probably not going to do that at the $4 level, like cup of coffee level, but like at the $5,000 level, like you could see a lot of malicious people, trying to do that. So it's just obviously like kind of crappy in those dimensions. But like where Bitcoin shines, supply schedule 21 million, like no questions asked. It is the most predictable asset in human history on that dimension. Where I think the money people have gone wrong is they overemphasize that one dimension at the expense of all of the others. And like, yes, look, Bitcoin provides 9 nines of probability around the supply schedule as we approach 21 million in the year 2140 or whatever it is. But like, dude, like 9 nines and 3 nines, like, I don't think that matters. And so that to me is like a major point where I diverge from everyone else. Ethereum people, I think very stupidly, leaned into the same basic framing and said, well, yeah, our money's programmable, like, great, sure. But ultrasound money, deflationary, aha, we got you. Bitcoin, we outdid you at your own game. And I think that was just like a very stupid thing to do, because I think it like, yeah, you're focusing on the thing that like, even if you are correct that ETH stays perpetually deflationary, like you can't prove that it will be deflationary.
Right.
And so there's fundamentally, right, it's not a predictable supply schedule. And so like, it's like a too smart by half. I'm like, nah, dude, like the point of the 21 million is that it's knowable ahead of time, which it is fundamentally not for Ethereum. So I think that they like pick the wrong variable and then pick the losing argument for the wrong variable. And then I look at Solana. Look, I'll be the first person to tell you, I don't think Sol is money or whatever. But like, since Sol is obviously comparable to ETH and Bitcoin as like a L1 asset, let's at least continue this framing for the purposes of Sol. I wrote a blog post in 2018. I think it was called Path to Tens of Trillions or something to that effect. And in it, I laid out what I called the utility thesis of money, which is the one of these systems that becomes the most widely used will be the one that like its native asset becomes money. Yeah. And to me, coming back to the original framing of like censorship resistance, usability, I see a world pretty clearly, in 3 years, I think Sol is substantially more censorship resistant in a world of multiple concurrent block producers than Bitcoin ever can possibly hope to be, or that even Ethereum, at least based on my current understanding of the roadmap, could hope to be. The programmable part, obviously Bitcoin is not even relevant.
Can you unpack that it will be more censorship resistant?
Oh, I mean, if we're in a world 3 or 4 years from now in which the Solana blockchain mainnet has 20, 30, 40, 50 concurrent block producers, that's my base case. That is just objectively way more censorship resistant than a system with a single leader. Because now if like you send it to the guy and the guy says no, it's like, fine, just like go to the next guy. You got 30 others to choose from who are block building now. And presumably in the next 1 or 2 seconds, that's going to rotate anyways. And then obviously there's like latency of like, hey, I don't have to go across the Pacific Ocean to like get to the leader. I can like, there's a guy, presumably within a few hundred miles of me. And then there's the the framework part, but I think like the system that ultimately powers the most economic activity, which again, at this point, my base case is Solana, that will be the one that most people will be like, oh, okay, this is the one. Like fast forward 5-6 years from now, let's assume at least 500 million DAUs of like some combination of these chains, whether it's Ethereum, Solana, Sui, Aptos, whatever. The only thing that I can tell you with 100% probability about that state of the world is Bitcoin still does what it does now, which is it's fucking inert and dumb. It doesn't do anything and it's still slow and shitty. And I think everyone in the world will be like, Bitcoin, like, oh yeah, it's like the boomer coin. Like, I don't know, it doesn't do anything. Today, like, does my mom know how AWS works? No. Does my mom understand that AWS powers Netflix? Yeah. And I don't mean that like she literally knows Netflix is the largest customer, but like generically she understands like when she hits the play button on Netflix, there are some cloud server somewhere that it happens to be Amazon or Microsoft or Google, but it's like one of the three big ones that like powers the show. And I believe we will be in a state of the world. Obviously, to be clear, she does not have to understand that fact. Like, there's nothing requiring her to understand what AWS is, but just because like she functions on the planet Earth and reads on the internet, like she understands that. And I believe we'll be in a state of the world 5, 6, 7 years from now, in which everyone will understand. I think it will be Solana will be powering the substantial majority of these global financial transactions. And if we are in the state of the world in which that is generally common knowledge, then I expect Sol will be the number one asset in that state of the world.
Kyle, which would be those applications? Let's say your mom is using an application 7 years out and it's based off Solana. What would it be? I'm just trying to get a gauge of.
Oh, it's going to be just finance generally. Could be Helium and stuff like that. It doesn't have to be that my mom is using anything that touches crypto directly. I mean, look, if Visa is settling, it can be a case that like my mom swipes her credit card or uses Apple Pay, and then it's just public information that Visa is coordinating the settlement of USDC on Solana rails from my mom's bank to the merchant's bank. I wouldn't call that an app of crypto because like in her mind, literally she's swiping her credit card in the same way she does today. But as long as that understanding is public information, which again, I expect it will be over some period of time, then the chain that powers that, I expect its native asset will be number one in crypto. Because I think everyone will look around and they'll be like, Bitcoin, that's fucking boomer coin. What does this do? And this other one powers all of these important finance things.
I'll just push back on that Bitcoin bit, right? I would think that it's just like gold. People would probably think that it's just one of many things that people can just buy. Gold is not used for fintech. Gold is used for store of value, I would presume, right? It can do the boomer thing and still be relevant, so to speak.
Sure, yeah. That statement is obviously true. Again, what I am underwriting is a derivation from the status quo. What everyone, 99% of people in crypto are projecting about Bitcoin in the future is that you can generally take history up to the current moment in time and reasonably project that that same general lens will persist. Like, I'm not stupid and I'm not like misunderstanding history up until now.
Yeah.
I am explicitly projecting a fundamental change in perception in the same way that like, if you look at like the early media around computers in like the late 80s and the early 90s, Bill Gates was like, computers are going to change all white collar work and you're going to sit at a computer and type all day. And everyone's like, are you fucking crazy? These things are horrible and this is dumb and it's bad. And like, obviously the perception of computers have changed very substantially over that period of time. And what I am explicitly underwriting is that the default perception will be Bitcoin and Solana look kind of the same to me. They're both called a crypto. They both kind of use this cryptography thing. I don't really know how it works. They both have these funny long addresses that I can't fucking read. They both move money around, clearly. And like Solana powers all the useful stuff and Bitcoin does not. At some point, whether it's in 4 years or in 9 years, we'll be at a point at which everyone in the world generally understands that to be true. And in that state of the world, I don't understand why like Sol is not flipped Bitcoin.
I think that's generally a beautiful way of framing how we look at the world and investing in general, right? Like, I think you're comfortable betting against the status quo, so to speak.
If you were to restart history in 2024, assume we have the fiat money system as we have it now, because that is what we have now, gold would not be thing. Gold is only a thing because of its historical relevance. And again, history is path dependent. So like, I understand why gold is what it is today, although I disagree with it, but like, fine. But like, that doesn't therefore mean digital gold will be functionally equivalent to regular gold. That's the jump that 99% of people in crypto make. And that's actually the jump that I think is like fundamentally unsubstantiated, because that is in and of itself its own form of projection.
That's some beautiful framing, by the way. Yeah.
Does this follow that reasoning by analogy doesn't work? Like, and is it something that you guys internalize at Multicoin?
No, I've never explicitly not liked Bitcoin for that reason. But now that you mention it, I've got another talking point. Thank you very much.
All right. Okay, so I've seen your Solana will flip Ethereum talk, I think, a couple of times to prepare for this. So you talk about the North Star, Ethereum not having one, and Solana consistently having one, right? And then, like, you lay a case as to how Solana has improved upon metrics and so on, right? So I saw one video of Sriram and Lily, and they were going back and forth. I think this was at the time of Breakpoint or somewhere around that, right? Sriram was arguing for Ethereum and Lily was arguing for Solana. I think they almost tried to answer each other's questions or comments towards the other party. But one thing that I think was left was Sriram mentioned this, that let's say I'm a builder and here I have to choose between these two systems, right? One is very difficult to change. Probably it needs approval of 500 people for the thing to change meaningfully. That is Ethereum. Whereas Solana, it can decide and ship out a phone in probably a couple of quarters or 3 quarters or a year or whatever. So for Solana, it doesn't take much to internalize things in its protocol. Versus, I know a fact that if I'm building a data availability layer or whatever in Ethereum, the chain is not going to try and compete against me in that particular domain. So he was laying the case basically for credible neutrality and saying that that is the credible neutrality that Ethereum offers. And that's why he chose Ethereum. I'm probably paraphrasing a lot, but he was arguing along these lines. And I don't think there was enough time for Lily to respond to that. So if you can, that would be great.
I have a lot of responses. One, the core gatekeepers of both the Ethereum and the Solana roadmaps are very centralized, and neither of the ecosystems goes out of its way to make it crystal clear exactly who has social power or not. But if you ask around in kind of both ecosystems, the answer you kind of come to is whoever controls the engineering roadmap for Anza, and then the equivalent functions for the 5 or 6 different Ethereum client teams. And actually, there's a lot of things. Like, for example, Vitalik recently proposed a 33% blob size increase. Like, it was like a month or two ago, and was shot down by like the engineering leads. So my point is that the number of decision makers as it pertains to controlling commits to the canonical client, GitHub repositories, is very limited. Like on the order of like 5 people per ecosystem, not meaningfully larger than that. And then now there's a separate question of validators. And like, look, if the guys like update the thing and like just change inflation and print themselves a bunch of tokens, hopefully the validators will catch that ahead of time and like it won't happen. So like there are some checks and balances in both systems. Again, I don't think there's a meaningful difference between 3,000 and 10,000 as it pertains to like catching something of that nature. So I disagree with the first point you said, which is Sriram was like, oh, 500 people have to agree for Ethereum. That is not in practice how EIPs are merged into these systems, because there is a VP of Eng in each who controls each code base, who ultimately chooses what goes in or not. So that's comment 1. Comment 2, Sriram saying Solana people presumably are more inclined to, at the base layer, move up the stack or launch adjacent products that could theoretically compete with competitors. I think that's correct. I don't really disagree with the assertion. I just don't think it matters. Like, okay, look, if you're building something that is adjacent or tangential to the L1 in some way, and if the core L1 team chooses to compete with you, like, sorry, shit out of luck, man. I don't care. Am I worried that Solana is going to compete with Helium? No. I've known Amir and the Helium team from the beginning, and those are not words they have ever said. It just doesn't fucking matter. So when your worldview is focused on L1 adjacent infrastructure, look, it's a threat, but fine. If Google shows up and competes with you tomorrow, does it fucking matter? It doesn't matter. Other people showed up to compete with you. So I don't know. I just don't care. And then third point, or it's more like a 2B point, is Sriram, based on this logic, is saying, therefore, Ethereum is more credibly neutral than Solana. And I agree, as a general statement, credible neutrality is a trait worth optimizing for in these systems. Where I diverge from Sriram is in his framing as this is the one vector of credible neutrality that rules all of the others. And that I strongly disagree with. Clearly, credible neutrality has a lot of elements to it. And one is, Nakamoto coefficient, another would be the number of clients, another would be the number of validators, a number would be the stake distribution. There's a lot of these things that go into a system as a whole being credibly neutral. And certainly the one that Shriram highlighted is like, to me, very obviously not the most important one. If I had to choose like what's the most important vector through which I think about credible neutrality, I think it would probably be Nakamoto coefficient, because that's like how many people it takes to stop the chain from finalizing. That strikes me as kind of the most simple and objective measure, but again, that is crude and incomplete. Yeah.
All right. So you mentioned that Multicoin is long only and typically good at taking bets on the basis of thesis. Everyone knows that you were incredibly successful at some of the thesis. Can you share one instance where you weren't, and how did you recognize that? Like, was that an early detection? It took time for you guys to realize that, okay, this is not working out. One instance of how that panned out.
I'll say Binance, I guess. We were the first, I think, large US funds to kind of publicly go long Binance, basically. We wrote a paper in February of 2019. I think it was called BNB Analysis and Valuation. We put on a big position in BNB. We were right. Binance space continued to consolidate market share for basically the next 4 to 5 years. Really up until the thing a year ago when the DOJ announced the thing with Binance and CZ. But basically, Binance's market share chart was generally up and to the right over that period. FTX came in there and obviously disappeared along the way. And we basically got everything right about the thesis, but we actually just didn't hold. We switched very famously. We were on the FTX train and ultimately ended up with a nice big egg on our face for it. But we, at some point, concluded in like mid 2020 or so, maybe mid to late 2020, that like we now believe FTX will systematically compound at a faster rate than Binance. A, that was just a very American thing to believe. But B, it was just like we let our like Sam and Solana bias kind of cloud our judgment that like look like Binance still has all of its advantages and like will continue to do well. So I think that's probably like a big error we made. We should have just stayed long BNB because like nothing changed. In fact, even like a year post DOJ CZ settlement, I'm not really sure much has changed. I mean, what's changed is like the organization has become probably more risk reverse and like the decision making. There's a lot more viscosity in the decision making, and so that's like probably a valid reason to like if you were an indefinite holder over that 5-year period that I just described, probably the only thing that actually changed in that 4-year period was the DOJ settlement. And you could from there infer, hey, like they just won't be able to move as fast anymore. But otherwise, everything else we got spot on if you read the February 19 paper.
I think, Kyle, what made you think it's time to rotate out of this into something else? Was it the lack of traction? Was it the market environment? What made you say it's time to bounce?
Oh, we fully switched on to the FTX train. I mean, we were like
Gotcha.
more aggressive, out executing, better product. I think the fact that, Sam was American, obviously just helped a lot. We just like felt more comfortable being close with an American than with the Chinese team. So I think all of our natural biases just made it very easy for us to flip in a more binary fashion than we should have.
I think what was your learning from that switch? Like, if I were to ask, what does 34-year-old Kyle know from that experience? Making the switch, going with Sam through that experience, what would you distill that learning into?
Oh, I mean, Asia is just huge. And like, dude, Binance is just dominant in Asia. They control, I mean, even still to this day with like launch pads and stuff, they control retail attention like in a very real way. That's just indisputable. And retail attention matters.
So there's a parallel world where you would hold both Binance and FTX, assuming FTX didn't blow up.
Correct. I think there's an alternative world in which we didn't go 100-0 to 0-100, but we went from 100-0 to let's say 50-50. That was probably the more rational thing to do as a capital allocator.
Gotcha.
I want to know a little bit about token extensions on Solana. I mean, you said that they unlock other things that are like useful for institutions, right? So have you had conversations with institutions? What does that look like? And how are we getting there?
Yes. And I don't know how we get there. The biggest questions are not technical. The biggest questions are demand related. It's not really clear. Yeah, like BlackRock's Biddle Fund makes a lot of sense because like it's a way to pass yield on to people who want yield. Beyond that, there's like not a lot of obvious demand drivers for tokenized assets on chain. So that in my mind is the biggest question. I think token extensions will be most useful in the context of stablecoin regulation because we know everyone wants stablecoins and MiCA kicking into effect here in a few months and will ramp up over time. And I'm expecting legislation from US Congress at some point in 2025. And I generally believe in that state of the world, token extensions will become substantially more important.
And can you unpack, like, for viewers, listeners, like, what is it exactly that they enable?
I mean, you can have a bunch of things. So you can have confidentiality, so amount moving around can be hidden. And you can provide audit logs, backdoor access if you so on an optional basis, if you so choose. I think that's huge. The ability for native revocation So like right now, Circle and Tether on Solana, they both have the ability to like freeze assets, but those are both custom contracts that Circle and Tether wrote for USDC and USDT respectively. And token extensions, they built that into the L1, and it's a free and open API for everyone. And so if we're going to have tons of other stablecoins or BlackRock Biddle funds or whatever funds, you don't want all of those issuers to be manually rewriting the same contracts. So embedding that into the L1, enforcing that as a common standard for all of the RPC providers and all of the wallets, I think is a really big deal. Oh, interest-bearing assets. Again, this is awesome for obviously if you're going to have interest-bearing stablecoins, it's a no-brainer. So really like that a lot. There's probably a couple of other ones. I forget. I think there's a native freeze function and a few other things. Oh, I think there's a function for like, hey, if you like lost your private keys and let's say you own Apple shares or something, they can like burn your Apple and like issue you new Apple to like your new address if you can prove, hey, it's me on the old, So there's a bunch of features of that nature that I think are basically required for large scale institutional adoption. I understand that like literally none of what I just described is in the BlackRock Biddle fund that is live on the Ethereum mainnet today. But I expect that to get to real scale, you will require because all of those things I just described have analog functions on TradFi rails. And I don't see how you're going to get to scale without all of those functions.
You got any advice for Ethereum and L2s? I know that you were talking about wartime mode and so on, but like, what does that exactly mean? And yeah.
No, I don't really have any advice for them. I'm kind of done.
It's going to be built on Solana.
Yeah.
Switch sides, right?
Look, too many decisions have been made that I just think are like the wrong decisions. So.
All right. If we can talk a little bit about like founders that are building whatever right now, and like what are the things that are big no for you when you are interacting with founders? Like, okay, this is what I see, then like, no, it's not going to work out for us. Like, can we talk about that?
I mean, I have a Twitter thread from like a few months back. I think probably answers this well. It's about like communication skills in the context of fundraising. And like, that's basically the only thing I look for at this point. And you kind of interpret that statement as fairly broadly. First communications, send me a deck or slideshow or a written document, or it can be a YouTube link of you giving, I don't really care what it is. Send me whatever it is that you believe is going to most effectively communicate your core thing to me in a way that I'm going to understand it. Then, obviously we're on a phone call. And then again, communication is kind of all that matters. Don't try and like walk me through the deck. It's like, well, I already read the deck. So like, I don't know why you're trying to walk me through it. And, I want to be able to understand how you are thinking and communicating answers to questions. That's very non-specific, but kind of how I think about the world now.
And the sector that you guys are most interested about?
DePIN and stablecoins.
And the reason being?
They work. It's like, they're great use. We have the best financial rails ever. Those are two great use cases of financial rails.
Okay. So like investing, you're rewarded for being contrarian, right? So like, does all of this come from that point of view, or is that how you are in general?
The word contrarian I've never really liked. Evolutionarily, it was rational to not question the tribe too much. Because if you go back 2,000, 4,000, 5,000 years ago, or 40,000 years ago, you needed the tribe to survive. And if the tribe just disliked you for any reason, like you had a fucking problem. Like that was basically imminent death. And like you could try and voice your concern to the tribe, probably only if you thought it would like lead to everyone not dying in the fairly near future. But there's a very obvious reason why you had to conform socially to survive. And I think that is generally holds true in human psychology across kind of all cultures today for very Darwinian evolutionary reasons. And I don't know if I was born with less of the Darwinistic, tendencies or whatever, but I just kind of never gave a shit what other people said. And I've always just kind of said, like, please re-articulate to me from first principles what the reasoning is of the thing, whatever the thing may be. And off from time to time, come to very meaningfully different conclusions than the rest of the people. I think that's more bug in human history than feature. Okay. That led to death for most of human history.
Yeah, I mean, we wouldn't have many things if there were no contrarians, at least peppered in history, right? Okay, this is the last one, I promise. What is the most contrarian thing that you believe you've said and whatever? I mean, I don't want to know the repercussions and whatever, but yeah.
I think Bitcoin doesn't solve a problem.
All right. Okay. All right.
Sorry, Bitcoin and Ethereum both do not solve problems.
All right. Thanks for the time, Kyle. This was fun.
Awesome.
Thank you.
Thanks, guys.
Bye.
Bye.